Here is why your stop loss is always taken out and you keep on losing money in the forex market. Hey guys, my name is Basil and today I'm going to teach you why your stop loss is always taken out and you keep on losing money in the forex market. So if you're new around here, make sure to subscribe. Let's get started with this video. So traders, one big major reason traders keep on losing money is they always anticipate a reversal, an early reversal, and they get taken out. So this is gold, guys. You can see this is gold. Gold has been moving in a downtrend for quite a period of time, and everyone has been anticipating when is price going to reverse, you know. So this is a zone that I was currently looking at to the morning, and I've seen most of the traders have been selling. I mean, they've been buying at this point right here. So now there is one thing we call liquidity grab. Anytime when everyone is anticipating a buy, because you can see price had given us this double bottom, you can see before all this happened. So price had given us a double bottom, so it had started going up. So most of the traders, what they do, they draw out a neckline just like this. Is a neckline right, like this. So this neckline. So this neckline has to price has to break this neckline. So you can see price had started climbing, going up with this big candle, this one big candle here, the blue one. So now everyone started buying, you know, price is going up, and they started putting their stop losses just below here, because since price is buying and you know it has broke out with a lot of momentum, forgetting that price still has a way for price to start reversing. It still has a way. I'll give you an example. Look at this part up here. See this price was giving us higher highs and higher lows, as you can see from down this side. You see high low, higher high, as you can see high low, higher high. Then here price started reversing. So this one now it started giving us lower high, lower low, as you can see. You see lower low, lower high, as you can see. So here we didn't have any sign telling us now price has reached the time of reversing. So what they do, they always come back to levels like this. So as you can see, this level here, this is acting as a resistance level since price fell to break here. Now what price is going to do is price will give you this false, you know, double bottom to tell you that price, yes, it's reversing, but in actual sense it's not yet reversing. Then it breaks out here with momentum, which is this candle that you're seeing right here. So when it breaks out with this momentum, it will make sure that it closes from outside like this. Then the next candle, it will start opening and start going up. As you can see, this is what this candle did. You see, now here it's telling all the people, most retail traders, we are buying, and then boom, you see, now the other candle drops. You see, big candle drops, and the price is currently still dropping to take out people's stop losses. People have been buying and putting their stop losses everywhere here. People have lost money. This is gold traders. So this is a reason why you keep on losing money, because you are not patient with the market. Most of the time you just jump in. So most of the cases you just jump into the market and start, you know, buying just because of what you're seeing. But traders, for price to break this zone right here, we need to see multiple taps onto this level right here, you know. And one key thing that can help you with knowing, okay, price has reached the time of reversing, you can always apply an indicator. So the indicator that I always like to apply is the moving average. So the moving average, I don't use these indicators to trade, but I use them to see confirmation. So I apply the 21 EMA and then the 51 EMA. So we're going to make this 51. I think it's just 50 here. 50, and then we're going to make this color yellow. Let's do this yellow. So like this. So you can see, traders, even on the EMA, it shows you price broke this yellow EMA, but it came back and closes with this one candle. You see, you always want to see if price breaks like this. You see, traders, if price breaks like this with this one candle, let also this other red candle close from outside, meaning this was not a fake out, or this was not liquidity grab. Price was, yes, reversing. Let's change the time frames to 4 hour, and you see traders, even on the 4 hour time frame, you can see price had not yet reached the time of reversing, you know. But most of the traders, just because they have seen a little bit of sign of divergency, you know, they have seen price crossing this, you know, but again you can see price pulls back. This is why I always tell you traders, make sure to always look out for the 4 hour candle. Mostly it gives you the better sign. You see, now this candle right here, everyone thought, I think price was going to, you know, close from up here, but again, boom, you see, it pulls back and goes back down. You see, now for me, I'm going to be more and more patient until I see a sign that, okay, now it's time for us to trade, and I'll take a trade. But one of the ways you can scale up and then take advantage of this market, always wait for price to cross this EMA. And also sometimes you can see these two moving averages crossing. When they cross together, exactly at the cross, that is mostly after price has broken out and retested at that same zone, and then we shall start seeing price going up, giving us higher highs and higher lows. But currently you can see this is a steep downtrend. Right now prices, it reversed, but today was not the time, and this is why most of you traders keep on losing money when you're jumping in too early, you see, because when you check all the reversals, you can see price has to play around multiple times before it crossing. And you can see when the moving averages cross here. So where do they cross? So this is where the moving average crossed here, you can see, you see. So you always have to wait and wait more, traders. You can see even here price reversed, go to the uptrend, but you can see where the moving average is crossed here and price went up, you see, traders. So, and then you can even see where they crossed. We had a bearish we had this pin bar candle, you see, price pulled back and giving us this one big candle, you can see. Then let's see where else. So traders, don't be too quick of jumping into trades just like this and losing most of your money. The biggest traders in the forex market can wait for a trade, even though it means to wait for me to wait for weeks and weeks. I'll wait as long as I'm not losing money. I want to always wait into something that I know, not something that I don't know, you see. And this is how you are trapped, traders, and you keep on losing millions and millions of US dollars in the forex market, guys. So make sure to change this and don't fall for this trap again. If you have enjoyed this video, make sure to subscribe, and I'll see you in my next